Welcome and thank you for joining us for today's webinar, Enabling Cross-Border Payments, Getting Started with the Right Infrastructure, brought to you by IOFM and sponsored by Routable. We have a few housekeeping notes to go over before we get started. If you have any technical questions or issues using the WebEx platform, please use the chat box and I will respond right away. If you have any issues with audio, please click on the phone icon above the chat window to receive the teleconference info. For those that do call in, to ensure call quality, everyone's lines have been muted. If you happen to get disconnected, you can log on again using the instructions provided in your webinar confirmation email. If you continue to experience difficulty, please email webinars@iofm.com and we will respond as soon as we can. We encourage you to ask questions throughout the presentation. Please type your questions into the chat box and hit send to submit them. At the end of the presentation, we will have our presenters answer these questions. We will also have 3 polling questions during the webinar. A pop-up box will appear when we run each poll. Please choose from the multiple choice answers and hit submit. We'd love to have your participation and insight. This webinar will be recorded and you'll receive a thank you email with the on-demand materials within 2 business days. And with that out of the way, I would like to introduce our speakers for today. First, we will have Shobhan Agarwal, VP of Finance at Routable. Shobhan has nearly a decade of experience in high-growth, product-focused tech companies, leading finance teams in FP&A, strategic finance, and treasury at Dropbox and PayPal. Prior to moving to the tech sector, he spent over a decade between investment banking in Citibank, New York, and consumer banking in Asia, Europe, and the Middle East, working in finance, analytics, and product management. Shobhan holds a MBA from Yale School of Management and a postgrad from IIM and a Bachelor in Technology from IIT. We will also hear from Mark Brousseau, President of Brousseau and Associates. Over the past 26 years, Mark has established himself as a thought leader on accounts payable, accounts receivable, payments, and document automation. A popular speaker at industry conferences and on webinars and podcasts, Mark advises prominent end users and solutions and service providers on how to use automation to improve document and payment-driven business processes. Mark has chaired numerous educational conferences and has served on several industry committees and boards. He resides in Center City, Philadelphia with his wife and 3 sons. And at this time, I would like to welcome our speakers and hand the webinar off to Shobhan.
Thank you. Thank you everyone for being here. I'd like to start with a story. It's basically it's 11 o'clock here in Pacific time. That I'm based in the Bay Area, and it's either pre-lunch or during lunch or post-lunch for a lot of you. So I'm going to try to make this webinar as interesting as a finance person can for B2B cross-border. So I'll start off with the story. I've been in fintech for some time, and long ago I had a conversation with someone. He was, I think, the CFO of the company. It was a mid-market company. They were doing about $1.2 million of cross-border spend a month. That's a pretty significant amount of spend, and a lot of you would be doing much more than that. He was leading a team of 6 who were focusing on this one. He was spending about $96K, about 8% of his cost was going into fees. And I'll refer to this story throughout the conversation because that long ago was actually April 2022, so just about 2 months ago. But I had the same conversation in June of 2014 when I was thinking of moving to PayPal and entering the fintech world. I had the same conversation in September of 2005 when I was in the Asia side of the planet. In the same time period, we have gone from credit card to having mobile banking. Instead of you paying high amount of fees to AT&T for calling internationally, we can do FaceTime and so many different ways at very cheap prices. So all of those things have become much more easier, cheaper for a consumer and for merchants and businesses. But B2B has just now started gaining that same traction. So B2B is lagging by B2C by about 8 to 10 years, which is very interesting. And at the same time, thanks to the last 2 years, cross-border payments have been growing by 30% in the last 2 years. And right now, about B2B cross-border payments are about 35 trillion across the world. And they're expected to double to about 63 in the next 3 years. So there's been a lot of change in the last 2 years and in the B2B world, and hence the interest in cross-border payments. So today we'll talk about what the different cross-border payments are. We're going to talk about what are the challenges, and then we'll think about how should a person. I've been talking to a lot of merchants and businesses across to understand how we should, as Routable, we should look at our cross-border solution. And you'll see what we discovered. So I'm going to talk about that, and at the end we'll leave some time for Q&A. With that, I think there's a poll question. So Mark, I hand it over to you.
Indeed, there is. We're about to do our first poll question, which is now displayed on your screen. We want to know, how many global payments does your organization make per month? How many global payouts does your organization make per month? Do you make less than 250 global payouts per month? Do you make between 250 and 1,000 global payouts per month? Between 1,000 and 2,000 global payouts per month? Or does your organization make 2,000 or more global payouts per month? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So, Shobhan, one of the biggest misperceptions when it comes to cross-border payments is that this is an issue for large companies, but these days, that couldn't be further from the truth. Even small businesses are paying global suppliers. Talk to me about how the challenges of global payouts differ from large companies to small companies and just how prevalent these issues are.
Actually, that's a very good question. SMBs and mid-market companies actually have a lot more constraints in terms of resources, in terms of ability to negotiate fees, and they are all mainly on accounting softwares, which needs to be updated every time you make a payment. Enterprise customers usually have more than, have a huge team that's doing this. They have existing relationships that are with different companies that help them in their cash management and so on and so forth, which becomes a lot more complex feature for them to manage together, but they're able to negotiate that much easier. The biggest advantage of looking at this and looking at the cross-border payment space from an accounting investment perspective and from a cost save perspective is what's actually we're seeing SMBs and mid-markets actually being the focus for most of the B2B innovation that's coming there. And only very recently has enterprises started being the focus of discussion because they actually have pretty set processes that they've been doing. It's a lot more pain for them to actually move. SMBs and mid markets, on the other hand, can move much faster because they have lesser amount of needs as compared to enterprises, and so they can move faster and take advantage of all of this innovation that's happening much more easily. The biggest thing is that you actually save costs and you have a much more efficient process as an SMB or mid market. So that's what I saw when I was talking to a lot of our clients and potential clients when we're going through this process.
Seems to me that more and more finance leaders are focused on finding better ways of making cross-border payments. And that's interesting to me because let's face it, most businesses have been making these payouts the same way for years. So what's changed? Why is it that more businesses are focused on finding better ways to make cross-border payments today than they were just a few years ago?
Actually, once we finish this poll question, I will answer that same thing, but just in a short answer to your question, cross-border B2B payments have skyrocketed in the last 2 years for obviously reasons, right? I mean, the strange thing is I never expected supply chain and cross-border payouts becoming linked to each other, but they are now. Most B2B payments are actually not electronic. Only 1/3 of B2B payments are electronic. But cross-border payments, by nature of them being cross-border, nobody's sending a check to like a UK or a Germany, right? I mean, they're mostly electronic. But the manual process that goes before that payment actually goes through, and the opaqueness of the fees that you are charged. And I'll give you examples throughout the conversation about what we saw when we were talking to a lot of our clients. That's what is encouraging a lot of finance leaders to look at how can I make this better, faster, quicker, and each painless to me for making even the shift. And today it's actually coming up again and again in so many conversations. And people are seeing that, oh, I was just doing this for the last 10 years in a way that I can have a significant change in 2 months, specifically as we go through a potential probably slowdown or whatever the economy goes through. I can actually save a lot of money and increase my productivity and efficiency by looking at this more carefully. So, we'll talk about this all throughout the conversation. I think it'll be a very interesting discussion.
We asked our attendees, how many global payouts does your organization make per month? 48% of our attendees today, Shobhan, are making less than 250 global payouts per month. Another 18% of our attendees make between 250 and 1,000 global payouts per month. Put it all together, and more than 2/3 of our attendees are making 1,000 or less global payouts per month. So what would be the single biggest piece of advice you want to leave to these organizations on the line who have less than 250 global payouts per month?
I would say that a lot of our SMB customers have come and said, well, I only make 250 payments. I use my bank to pay for most of them. And how many payments do you need for me to start getting some benefit? And the answer to that question is you need probably 10 payments a month to start getting a cost benefit of any of these solutions. So what people think is, oh, we are too small or we just don't make enough global payouts. 250 payments a month, look at all the fees you're paying, and then look at what kind of savings you can get by looking at them more deeply. 250 payments a month is actually a significant amount per year. And you can do a lot of efficiency improvement just on that part A or the 48%. So people don't look into this just because they think that we are too small. I can tell you that we are helping customers as small as making 40 to 50 international payments to as large as making 5,000 international payments. And you can get a similar cost save on both sides. That's the beauty of the solutions to today. And we'll talk about that.
Let's go to the other extreme. What would be the single biggest piece of advice you'd give to the folks on the line who are making between 2,000 or more global payouts per month? After all, they must have the process down, no?
Well, actually, you'll be surprised. A lot of them are still using think of it. I spoke to someone in April. They were doing $1.2 million a month in global payouts, and they were still using their bank. And they were having a third-party provider helping them with a lot of things. I'll talk about those features. It's first of all, do look at solutions because you will find a lot of benefits from getting an AP solution in place, specifically for cross-border. And the second thing is, if you're making more than 2,000, you should look at a CSV upload or a feature like that, something that helps you to organize and send those payments with a click of a button every month. And the person I spoke to, he had a 6-people team who was doing global payouts every month. 6 people doing this month on month. Because you have the $1.2 million a month is a pretty significant amount, specifically when your average transaction amount is about $1,000 to $2,000. 6 people were doing this, and we cut that down to less than 2, just on a simple integration. We'll talk about that. They have been testing us for two months, and they've just come on board. It's an amazing experience, and that I'll use that example in different places.
Now that we know how many payouts our attendees have, let's find out how they're handling those cross-border payouts. We're about to ask another poll question, which is now displayed on your screen. This time we want to know, how are you handling cross-border payouts today? Are you doing it manually? Are you doing it through your bank? Are you using wire transfers or SWIFT? Are you using a technology solution provider without accounting integration? Or are you using a technology solution provider with accounting integration? Take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. Well, let's dispense with this right away, Shobhan. And that is that many organizations have relied on banks for years and years and years to do their cross-border payments. Is that an option that's outlived its usefulness?
I seriously think so. And that's the reason for why B2B, B2B innovation is happening in so many different ways. I think there are two parts to this. See, banks are structured very well for helping large scale payments, but banks also are very good in Swift or wire transfer. That's what is being used. I mean, more than 70 to 80% of transfers today are through Swift or wire transfer. But you don't need a bank to do that. Now there are different ways that you can get that done. The other part of it is, but however, banks are notorious in not integrating with accounting softwares, having systems and user interfaces which are not very easy to manage, specifically when you're looking at financial operations or you have finance people looking into doing those transactions. So now you are stuck with a system that would be upgraded every year, every 2 years, every 5 years, but then you're using a system at a bank which probably is 10 years old or more, and they can't change that fast for many reasons, including they need to make sure that there's fraud risk taken care of, they're taking care of all the different security measures, so it's very difficult to upgrade that in some form or shape. So that's, I think, getting or looking at solutions beyond your current bank is going to be very useful for any finance operations or finance leaders in the world today.
We asked our attendees, how are you handling cross-border payouts today? 39% of our attendees say they rely on wire transfers and SWIFT. 15% say they're using their bank. Another 15% say they're handling things manually. Oh, you have work to do, Shobhan. 10% of our attendees say they're using a technology solution with integration, with accounting integration, and another 5% say they're using a technology solution without accounting integration. Well, no matter how many payouts you have a month or how you're handling them today, chances are there are efficiencies and cost savings to be gained by improving upon the process. And to tell us how to do that, I'm going to hand it off to Shobhan.
Thank you. And what I find interesting is 90% of our attendees are actually doing a cross-border payment without an accounting integration. And that is extremely interesting, because for me, the single biggest advantage, apart from fees and speed and optionality, is the simplicity of having that updated into your accounting software. All right. Awesome. So we'll talk about what the existing process is, and I'll go back to my story in a bit. But usually this is how it happens. You choose the bank and the payment method. You have different options. You have multiple fees. And then you choose the method, whether you want to do Swift or wire, or you're doing an ACH, which primarily comes through is speed important. If speed is important, you would do a wire transfer. If speed not important, you would probably do an ACH. A lot of you might have not even thought about ACH, which is clear from the 40% who use a wire transfer to send cross-border payments to your vendors and partners. Then the second part used to be fees, or is fees. The interesting thing is, when we were talking to a lot of mid-markets and SMBs specifically, they would say, oh, my fees is $10 or $20. $20 is Swift fee, $25 is Swift fee. That's my Swift fee. And I would say, great, excellent. Do you know what your FX fees are? I don't know that, because that comes across in my conversation, in the normal scheme of things, and I get charged at the end. Do you know how much you are getting charged for it? No idea. Specifically in the Eurozone, cross-border fees are really prevalent. A lot of people haven't even looked into that. There was a person who came up to me and said, oh, I only get charged 3% for my transaction fees. And I was like, that's great. You're using a pretty archaic method. So I wonder how you're doing it. And he was part of those fourth one, which was using a technology provider. And he says, okay, well, I use my balance for it to send euro transaction, for example. I said, that's awesome. How do you get euro dollars? Oh, they deduct it from my USD and they convert it to euro, and that's the balance I keep. So I said, okay, how much do you pay from your USD to the balance of euro that you are getting through? He had no idea. I said, how long do you keep that euro amount in your bank? Typically a month. So you're not only losing the float advantage of that euro, but you also are actually paying a much higher transaction FX fees when you're converting that USD to GBP. So those kind of questions are interesting when you're talking about the existing process. And the last but not the least, which comes across 90% if you do not have integration with accounting system, hopefully all of you are going to grow into 1,000 times, 10,000 times what your current scope is. Imagine doing that 1,000 times. That's what's very interesting today in the cross-border space. And we'll talk about that too. We've talked about the three things. The last thing is what I wanted to touch base in this slide. Why is B2B and B2C so different, or C2C very different? Well, there are two parts to it. When I'm sending money internationally as a consumer, I'm very price conscious, or I'm conscious about when the money has to reach. That's it. The amount is one time. I'm doing one time 6 months or a year or whatever, or even once a month. Pales in comparison to what B2B payments are. B2B payments are, as you can see, less than 250. So that's the primary, but they go up to 5,000. The second piece is there is a lot more integrations and a lot more steps that have to come through in B2B payment. And I have to send money across, or even if businesses have to send to consumers, all they need to do is they need to just look at what the person is, how much amount they are sending. They don't have any other integrations that need to be done. When you're doing B2B payments, you have to keep track of them in your accounting software. You have to keep the track of the end of the year when Uncle Sam comes calling, you have all of those come in one place rather than you going through your bank, reconciling all of them with how much payments you've done, what were the invoices coming through, and so on and so forth. That difference is what that difference is important, and that's what is leading the innovation in B2B versus B2C. Before we go ahead, I wanted to also talk about a few things here. Now, if you look at the overall payment volume in 2020 onwards, in 2020, 2021, there was a decline in the overall payment volume. However, B2B payments and cross-border B2B payments grew 30% in the last 2 years. That is one reason why people are seeing innovation in this space. The second one is the digitization. Now, what you will see in subsequent slides is we'll talk about what are the advantages of looking at a new and improved cross-border AP system. These are the steps that you go through when you're doing a cross-border payment. By the way, you will see that when I want to send money abroad, I don't have to go through all of this. I just look at identify who I have to send it to, the person, and then I route it, and then I don't even track it. I just look at it in my bank statement. For a B2B payment, you have to first identify the payment that has to be sent to the vendor, which also means that you have to onboard that vendor to your system. You have to route it. You have to authorize the payment, approve the payment internally. Then there's a settlement that's happening, and that's tracking that needs to be done. What I have seen is most SMBs have step 3 to step 5 specifically, and step 1 are all manual. And when we were thinking about making our cross-border solution, we spoke to a huge number of small and medium businesses to see how we can make it as easy to onboard a vendor, to approve payments, to settle and track them. And you will see that across. These are the common ones which I use. And most of you are using wires, which is pretty clear because 70 to 80% of international cross-border payments is done through a wire transfer. So SWIFT is the most well-known. payment, the transaction fees is actually pretty high there. If you look at transaction fees can go from 25, 26 bucks to more than $40, $50 for exotic currencies. Local bank ACH or local bank transfers or international ACH is actually, more secure way of transferring. You have a much lower fee cost, and a lot of you might not have even looked into it because not many people in the business world actually know about that. Then there are prepaid debit cards, which are, you don't need a bank account, and this is specifically true for gig economy companies, but there's a high fee cost for it. And then there's PayPal. PayPal has been traditionally part of cross-border world for a long time, and that is something that a lot of people have asked for, whether we have PayPal integrations, which we are working on, and going through a different features there among all four of us. But wire transfer still is about 70 to 80%. Let's talk about the challenges, and then we'll talk about how people have solved this in the accounts payable or B2B cross-border payment world. But before that, Mark, I hand it over to you. I think we have another poll question.
We do indeed. The poll question is about to be displayed on your screen. This time we want to know, what's the biggest challenge your organization currently faces with making cross-border payments? Is it speed? The process is too slow, or you don't know when they arrived? Is it the price? The fees are too high? Is it a lack of flexibility? Payment options you need aren't available? Is it an onerous, time-consuming, risky vendor onboarding process? Or is it that payment reconciliation is a nightmare? A nightmare. I tell you, take a moment to respond to the poll question now displayed on your screen, and we'll discuss the results in just a moment. So I'm curious, when you talk to senior finance execs, what do they tell you is the biggest challenge they see in the way their organization makes their global payouts? CFOs, controllers, what's on their minds, Shobhan?
So it's very interesting. Peace and lack of flexibility has been top of mind, and followed by a payment reconciliation. I think those are the three things which have come through. I'll give you an example. When we were talking about the $1.2 million story that I spoke about, April 2022, so very recently.
Right.
He first said, I have about $45,000 of cost. And he was using a very archaic method to send. It was through bank. He had 6 people team doing that reconciliation, setting that process up, and so on and so forth. And I was like, 45,000 seems to be pretty, high pretty low from whatever I know the process should be. So I asked him a little more about his fee structure. And he says, well, we only pay about 20 bucks a month per vendor to be on that platform. I was like, okay, how many vendors do you have? He says about 2,000 vendors. I says, you're paying 40,000 bucks as vendor fees every month, and you're paying $45,000 or so in terms of cross-border fees. So you're actually paying about $96,000 or $96,000 as fees. And he looked at me and said, well, I never thought of it that way, because there are 2 different teams that manage it. One is a vendor onboarding and vendor management team, and the other one is our FX fees team or treasury team. And whenever I asked the treasury people how much is our FX cost, they would tell me 3.5%. And I used to ask vendor management people, they'll give me the cost too. But I've never clubbed them together and said, oh, that's the total amount of fees I'm facing. So that was a light bulb moment for me, that there is a lot more complexity to this cross-border one. I see the results are up, and speed and vendor onboarding is coming through.
Yeah, and I'm going to ask you about that in just a second. We asked our attendees, what's the biggest challenge you're currently facing in making cross-border payouts? 25% of our attendees say the process is too darn slow. Interestingly, 23% of our attendees are challenged with the vendor onboarding process. 13% of our attendees said fees are too high. 13% said they don't have enough flexibility. And 8% said payment reconciliation is a burden. Let's talk about vendor onboarding. We often think about the process of initiating and reconciling payments, but in many cases, the inefficiencies start from the very moment we onboard our suppliers. What is it about the way most organizations are onboarding suppliers that makes you cringe, Shobhan?
It's see, vendor onboarding is not as simple as just putting them on the system. Right? There is a process. You have to get approval. You have to make sure there is no fraud happening. You have to make sure that when you're sending that money to whichever bank or country, it's you've done enough checks, KYC, OFAC, all of those checks coming through. The when I had this we have been talking to a lot of vendors as well as we developed our cross-border solution. What was interesting, Mark, is vendors said that they have to often wait 33 days to receive a cross-border payment.
33 for days?
Yes, which is very interesting because that, one vendor said, look, the problem that I'm facing right now is supply chains are constrained. And I have to make sure that the person pays me so I can dispatch the goods. But if I miss the boat, and when I say literally miss the boat, there are ships which go off, and then you have to wait another week or two for the next ship to go through. I am not only putting my financial health in jeopardy, but I'm also putting the clients, whatever he's using those SKUs for, I'm putting those on jeopardy too. So if I'm waiting, and no longer is the time when people are giving, used to give credit as much with the change in the economic situation across the world. So he said, I'm just building that cost into my cost, and clients are paying for it. And so when you have these vendors taking that much time for speed, and it starts with onboarding, which is going through that process of having a seamless vendor onboarding payment, making sure that those vendor details are coming through whenever you look at them. Once you get that setup done, which can take as much as 3 weeks sometimes, because you have to have multiple levels of approval depending on the size of your organization and the complexity of the vendor onboarding process. So all of those two things are leading to 2 to 3 weeks for a vendor to be onboarded. I have yet to see a company that has not implemented an automated solution and can do that within 1 week, like within 3 to 5 days. Just simply getting those details from vendors takes about 2 to 3 days. And then if you can get all of that other part clearly identified and challenged, you can just finish it in a week. Most people that we spoke about are taking 3 weeks to a month to onboard vendors. So I can see why vendor onboarding is high up along with speed in this conversation.
And I imagine the disruption caused by the shift to remote working and all the new threats around fraud are contributing to all that. Okay, so we know what the challenges our attendees are facing. How do they compare to the cross-border payment challenges you are hearing from other organizations? Tell us about that, Shobhan.
Thank you. So this is actually very clear. High fees, lack of visibility, lack of payment flexibility, which is not every vendor needs to be paid in 24 hours. In fact, a few vendors might actually give you discounts if you're paid earlier. A few vendors might allow you to pay them in 30, 60, 15, 10 days. And that's the interesting part. Difficulty of onboarding new vendors, very clear from our poll that's high up with speed. And the last but not the least, difficult to reconcile payments, which is the lowest one in this. But actually, when we were speaking to a lot of people, they said, when we need to reconcile payments at the end of the year, we want a place where we can easily do that reconciliation. And the vendor and us can see what invoices have been paid, what have not been paid, rather than we sending emails across. He said, one of the people we spoke to had just come out of a frustrating vendor reconciliation process. And he says, one vendor, we had to email them 48 times to make sure our year-end taxes are filed correctly on that cost. So that's the kind of cross-border challenges that people are facing. And what we saw is very clear from whatever the poll booths came through in terms of what challenges do most vendors face. But what do you then look at when you're looking at a cross-border payment solution? And for ease or simplicity, I would look at 3 S's. needs to be simple, it needs to be seamless, and it needs to be scalable. So the number one is scalability. If you have a growing business, if you have a business that needs a bigger international global coverage, that's the first part that you need to look at when you look at a cross-border payment solution. The second part is it needs to have simple, which means it needs to be multiple payment methods and multiple speeds which are available. It can, ongoing vendor relationship management, in which case the vendors can look at your screen or some screen that both of you can look at, and you can continue to have that. The interesting thing that I would also mention is in the most interaction with vendors happen on emails. And if I'm wrong, please reach out to us and let us know that's not correct. A lot of interaction happens on emails. You send an email to a vendor, they replies back in 10, 15 days. If you have multiple invoices coming through, people usually ask, can you mention the invoice number in your subject line so you can engage on the right one? If you can have a screen where every invoice, you can interact on every invoice on that screen, so you don't have to interact on emails every time, or with the optionality to always reply to an email and it gets captured in one place for every invoice, that has been the single biggest advantage that I have seen when I'm starting to look at cross-border solutions. We started, when we developed it, the first client we had was just ourselves. And my reconciliation is within a day of close of books or close of the month, I can do my whole cross-border reconciliation. Not only that, invoices that are paid, that are not paid, I can literally look at each invoice and say if acknowledgement coming through, what the vendor is saying, the vendor can reply back on the same system. So those simple, seamless, scalable. If you can remember these three things when you're looking at a cross-border payment solution, this 1 hour would be very well spent. Let's start with easy to scale. Now, there are two things that a lot of people talk about. 250 transactions are high enough that sending 250 transactions every month would take a significant amount of time by your team, depending on how the team is structured, depends on how comfortable they are, who are you sending to. It's CSV upload can be a very big advantage. So if you're looking at a cross-border solution, think about having that optionality of a CSV upload. Think about it can handle all the payments, multiple currencies, without having to set up each currency and each module, for every payment solution. So that's the ease of scale part. Multiple payment options and speeds. Swift is probably one of the most expensive ways to pay for cross-border payments. If you can get local bank transfers, you would save a significant amount of cash or in fees. More flexibility means you can define how and when to pay your contractors and vendors and partners. So giving you a simple example, Swift would typically take about 3 days to a couple of hours, depending on the speed that you're going towards, to settle. Local bank transfer can take about 4 to 5 days. The cost difference between the two can be as much as 50%. So when we spoke, the example that I gave about 8% fees and $96,000 is what they were paying as fees all in for a $1.2 million monthly transaction, we were able to bring their cost down to nearly $45,000. We were able to save 50%. And it was a mix of Swift, in which you want to make sure that you are sending the payment as a particular point of time, and local ACH, which could actually save fees. Now, one thing that people don't understand in this one is it depends upon whether you want to send. Let's say you're sending 100 USD to a partner in GBP in Great Britain. It's important for you to understand whether you care about whether the vendor gets 100 GBP on the back end, or does the vendor get whatever is the FX rate at that point of time. Having that clarity about, do you worry about how much the vendor gets, or do you worry about how much you pay? gives you that payment optionality of whether you want to use Swift, whether you want to use local bank transfer, or you want to use check in some cases, though I have yet to see a lot of people use check for international payments. It's gone beyond that. Ongoing vendor relationship management is, as you can see from the poll, about 22% of the people actually have vendor onboarding issues. But it's not only just having the ability to onboard themselves. Vendor can onboard themselves, enter their information. You have a vendor experience with your company branding, and they're talking to you as a company and not to a third party. That is extremely important. But apart from that, having one place where they can see all the invoices that have been sent, all the invoices that you have paid, all the conversations in one place in a seamless way, that is immediate improvement in your vendor relationship. The last part, ongoing centralized communication with vendors upon payment specific to each payment, is one of the biggest advantages that I've seen of using a customized solution, or have a solution that has all of those integrations built in. Global coverage, absolutely. I think that's now become table stakes. If you are using any software that can only do a particular amount of transactions, then you are limiting the scale and scope of your interaction. I think having a solution that can support any global increase that you have is going to be important, and integrates with your existing system. This is interesting. This is the one that comes through after people have talked to the top four that we spoke about. But this is the one that has the biggest productivity advantage for the finance teams. Having a system that does not need a manual update of your accounting software is extremely advantageous. So the example again that I have been quoting, we were able to decrease his team from 6 or 4 people could go into other parts of finance, and he could manage the whole thing with 2 people, because there was a CSV upload. He's sending more than 2,000 payments a month. It was a CSV upload. They could look at all different transactions of different currencies in one place. They could create that system, and all of that could update their accounting software as the transactions are going out. That is amazingly advantageous for any finance leader who is looking at productivity improvements for from this interaction. Last but not the least, this is built into your AP platform. It's very difficult to maintain 2 different separate systems, which if you're using a bank or a wire transfer, you're possibly using 2 different separate systems for your domestic and international payments. If you can have all of that in one payments with separate screens for international and for domestic, so you can easily look at what to focus on, is going to be extremely advantageous as you specifically when you go into the world of supply chain constraints or supply chain changes and so on and so forth. I think the one thing that we haven't looked into when we're talking about this is fees. A lot of AP solutions, or even and banks specifically, will give you rates which have built-in currency conversion fees or FX fees. The second part of it is if you have rates which are set every day, daily rates, they're already building that in, because no solution will give you real-time rates unless and until you look for a solution that does that. The advantage of having that solution is that you get to know what your rates are at that point of time. And that gives you a lot of flexibility into managing your fees. Not only that, you take advantage of different rates that are coming through, because trust me, when you're looking at a daily rate or even weekly rate settlement that's happening, they're already building that volatility into the fees that you're paying in terms of FX. Last but not the least, you should have a partner who can tell you the advantages of different solutions that you can look at. So if you have that flexibility of 5 different payment options or 3 different payment options, and you can choose which one to use, which you possibly won't be doing if you're using a bank or a manual process to do it, that is going to be extremely advantageous when you're looking into this one. I'll give you blatant advertising campaign here, but we actually, when we were looking at doing an international or cross-border payments as a solution and building it into our platform, we went through a huge number of discovery conversations with SMB and mid-market customers. And what we found is our unique things, which we have already spoken about, and what we are doing in order to make sure it becomes easy for you guys to handle it. We saw people need an API solution that integrates with their software. They do not want to change screens and go into another screen and then go into the third screen to update them. They also want to have a simple, easy way to upload and send a lot of transactions. If you're sending 2,000 transactions a month, CSV upload can literally change your life in that form or shape. We can now do that without any speed and stability issues coming through. We have a seamless vendor experience. That's one of the things that we looked at when we were looking at vendor onboarding questions that people were saying. They said, we don't want to send people to a third-party screen. We want them to be on our screen so we can have an experience that people agree. There's a branding from a vendor portal. It's local to each country. It's an amazing experience overall. We do that. There's multiple payment methods, which is kind of the reason why we got into this, because we saw a need for that to happen. And not only that, we actually went directly to the source. We went directly to people who are getting wholesale FX rates and then passing on the savings from having that access to our customers. So our fees and per transaction fees is minuscule compared to what the people are charging today in the world, specifically banks. For people who are using banks, please look at your fees. You will find a huge advantage of looking into cross-border solutions, and I'm happy to help on that one. And before we end and open it up for questions, I want to just give you an example of Garment Trade. So One Shop e-commerce marketplace. They have about 1,000 independent boutiques, which means they have to send about 1,000 to 2,000 payments, international payments a month. And what they did is replace the time consuming with API automation. We saved them significant amount of fees and significant amount of effort when they are sending this. They have been with us for over a year and a half. We have been launching new products with them. It's a very interesting use case when you want to think about 250 or a 2,000 transactions that are coming through. I think in the we have spoken to people who have done as less as 20 transactions a month. And for them, the biggest problem that they were saying, and Mark asked this question earlier, the biggest problem they were saying is, I don't know whether I have the bandwidth to integrate with you guys, because that's often the question that people ask. And when we showed them the process of integration, they were literally, their reaction was, that's it? That's all I need to do to be on the platform? I said, yeah, that's all you need to do. And I can use the CSV upload to send these 20 transactions every month. They used to send 20 transactions every month, end of the month, to the 20 vendors that they have. I said, yeah, that's it. That's all you have to do. Put it in the CSV, upload it. Look, you get all the USD amounts at the time, what you're paying, approve the transaction, and it goes out. He was, I mean, I could see the surprise on his face when he saw that. And he was like, this is amazing. And what is my fees? And I told him all the fee details. And he was like, this is, I didn't know that these solutions existed and so on. So think about the two things that I would like to say. The first thing is, please look into your cross-border solution, people who are doing 250 or 2,000 transactions, and see what kind of fees, overall fees that you're paying, not only just the transaction fees, but also FX fees. And you'll discover most of you will be paying more than 5 to 6%. Make sure that the integration is simple, seamless, and scalable. Whichever one you go towards, I would obviously ask you to, give us a call. Let us try to understand your use case more. But it's the three important terminologies that you will see when you're looking at your AP solution. If you have any questions, please reach out to sales at Routable. And if you have any questions for me, please reach out to sales at Routable and ask them to send the question to Shobhan, and they will definitely reach out to me and forward me that question. Mark, I want to open it for questions if you are.
Absolutely. Yeah, you don't have to wait to ask your questions for Shobhan. You can do it right now. We're going to enter the Q&A portion of this webinar. If you haven't already asked your questions for Shobhan, or if you've thought of an additional question, go ahead, use the chat tool on your screen to send your question to me now. We'll answer as many questions as time allows, and we already have several in the queue. Our first question is from Ludovic. He writes, what is the difference between using a bank to enter wire transactions with Swift and just doing it myself?
The biggest advantage is connection with the bank. So when you're doing a Swift transaction, if you're using a bank to enter the Swift transaction, they'll deduct it from your bank account. If you're doing it yourself, you'll have to also put your bank account details in it. Typically, both of them, it's similar in some form or shape. What I would say is, instead of doing that, look at an AP solution that's already connected to your bank account. So all you have to do is onboard that vendor, and then you can send it out with a click of a button. The second thing is, depends on what you're doing yourself versus the bank. But usually, if you're doing it yourself, you'll probably have to enter vendor details every time. Depends on what solution you're using. With the bank, hopefully, the vendor details are being saved, though my Swift experience with my bank has been pretty atrocious because I've had like a huge number of those coming through, and I can never differentiate one with the other. So I think those two are the difference is the number of times you're entering it, and the ease of reconciliation that you can have, because you probably can see your bank transactions in place. If you're doing it yourself, you probably will need to go to your bank and then have another place where you won't need to look at all of those that you have done. So that's the major difference between the two. Usually from a consumer perspective, you usually use your bank, because a lot of people personally won't even have access or won't even know where to go to enter a wire discussion.
Tamara wants some clarification on using international ACH to send USD payments. She writes, we have a legal entity in Canada who uses a Canadian bank. They said they can do international ACH for USD payments to vendors in the US, in the United States. Is that correct?
It should work. I think the question will not be on the ACH part. It will be the kind of fees that you are that you're being charged for it, and the speed of that happens. So it depends on the software that you're using, or if the bank can help with that piece. International ACH can happen in any form or shape. It should not be a problem. Specifically between Canada and US should not be a problem. The question is the ease of sending that, and the kind of details you need for each transaction. That's what differentiates a good system with the other. I think I'm not able to understand what exactly is the problem in that one that you're asking about, because international ACH can easily happen between Canada and US, and vice versa.
That brings us to a question from Agnia Zika. I apologize if I mispronounced your name. She writes, hi, how high can fees for a single cross-border payment get? You mentioned they get high, so how high can they go?
All right, so let me give you an example. There is a USD to euro transaction that we looked at that went as high as 9.2%.
No.
And yeah, and I'll
That's
tell
like
you
a
why.
loan shark.
That's like a loan shark. So I'll tell you why. Because first of all, there are two parts to that. There is a fixed amount of fees, and a lot of people will say, okay, if your fees is $10, $20, that's fine. But remember, it's $10, $20. If you're sending a $200 transaction, your $10, $20 is anyway 10%. But let's even take that. Let's even take that out. The interesting thing is, if I do a USD to euro, what people say is 1 USD or €1 is equal to 1.2 USD versus 1.1 USD. People don't understand that 0.1 is a huge amount of FX change that happens. And that is what is very interesting. It's when you look at the one-to-one transaction, you see, okay, your real rates are about 1.1, I'm being charged 1.2, it's close enough. But that itself is nearly 10%. That's what's the amazing part of FX is. And cross-border payments have traditionally been that opaque. Not only that, if you look at on the other side, even on a wallet to wallet side, if I send money from one wallet to the other in US to UK, and let's say they have a multi-currency, which means you are sending 100 USD, it's from the US, it's reaching 100 USD in UK. When they will take that money out to a local bank account, that FX can go up again, because that depends upon what that bank account or that system is charging you. So you will see that it is amazing. I've never seen a person who has not looked into that being charged less than 5%, even to a USD to euro or USD to GBP transaction.
That's impressive.
Which are very common, which are high volume corridors. So it's very common to see that. In fact, even for a consumer to consumer, just search for comparing rates, and you'll see traditional banks in the US versus one of those fintech companies. They will have a difference of 5 to 6% just in FX rates, not even fees, just in FX rates.
So Vita wants to know, any recommendations for paying contractors who are working abroad?
I mean, we actually, the 1.2, the example that I quoted, they were basically developer contractors that are working abroad, and they pay them through our CSV upload. It's easier when you have a way to onboard customers into your vendor onboarding portal, specifically when you have contractors that would likely be changed every 6 months, 1 year. They would move on, subcontractor will move on into other pastures, you'll have new contractors coming in. Having that one platform where you can get all those contractors to enter their own details, you send them a transaction, you have all of them in one place, that's going to be extremely useful. So the example I gave was literally the exact question that you're asking. That person, that business does exactly that. They have developer contractors that they use for different client details, and they pay them through the Routable platform.
Sushil wants to know, what IT resources are involved in integrating Routable with our ERP or accounting system?
You will find that our integration process is very, very simple. It depends upon your accounting system, but we have very simple, easy way to onboard NetSuite, QuickBooks, and most of the accounting software that you would be using. You do not need a high-end engineering resource. You don't need a high-end technology resource. You have simple API solutions that can literally click off button. They can integrate with your accounting solution, and we can help in doing that from our side.
That will be our final word. Thank you so much, Shobhan, for an excellent presentation and for sharing your insights with us today. And thank you all for taking time out of your busy days to join us. And with that, I'm going to hand it back to Jovi. Ms. Jovi.
Thank you, Mark. That's all the time we have for today's program. I just have a few quick housekeeping notes to go over before we officially close out. If you could please fill out the short evaluation form that will appear once you close the webinar, this will better help us serve your needs in future webinars. And as a reminder, the on-demand materials will be emailed to everyone within 2 business days. This will include a PDF of the slides as well as a link to the recording of today's presentation. Thank you again to Mark and Shobhan for a great presentation today, and thank you to all of our attendees for taking the time out of your busy days to join us. This webinar was brought to you by IOFM and sponsored by Routable. Thank you all and have a great day.
Thank you.